Hi, I'm Steve LaFrance and welcome to June's Market Update. We all know this year has been full of many ups and downs, but many are now surprised to learn that we're in positive territory. Let's start with the numbers. The S&P surged 6.3% in May, the strongest month since late 2023. Large cap stocks led the charge with the NASDAQ up 9.2% and the Russell gaining 5.2%. International stocks advanced but trailed U.S. markets this month, with developed markets up 4.8% and emerging markets gaining 4%. Technology remained the top performing sector, joined by industrials and consumer discretionary, both climbing over 8%. Healthcare was the only sector to decline, while defensive sectors lagged behind. Bonds ended with a slight loss, down 0.6%. Investment-grade corporates managed a modest 0.2% gain, while high yield returned 1.7%. So big picture, the markets have faced 2 months of policy-driven volatility since tariffs were announced April 2nd. Yet, they're nearly back to where they started. After a sharp drop in early spring, the S&P is now within 4% of its all-time high. However, investor confidence is shaken, inflation expectations are rising, and the Federal Reserve has paused rate cuts. Trade tensions have now eased for the moment, with tariff pauses extending through July for most countries and mid-August for China. But uncertainty remains, especially with a recent court ruling challenging the administration's authority to impose tariffs. While early data suggests limited economic impact so far, markets could continue to react to new developments. One key takeaway from this period is how quickly sentiment shifts. Markets don't just respond to current data, they anticipate future trends, which explains why stocks can rally despite weak reports or drop on strong economic news. As we've said many times over, the one thing markets dislike the most is uncertainty. Remove that, and fundamentals will drive market performance. This reinforces essential investment principles. Staying invested helps avoid costly timing mistakes. Emotional discipline is key, and a diversified portfolio provides stability. With volatility likely to persist, focusing on long-term strategy rather than reacting to short-term swings remains the best approach. That's all for now. Thanks again for your trust and confidence.